Based on the historical data and forecast, Bitcoin shows a fluctuating trend with recent consolidation. The RSI indicates that the asset is nearing oversold conditions, with values fluctuating around 50 to 78. The Bollinger Bands show that the price has been trading within the bands, suggesting periods of volatility and consolidation. Considering this, I recommend a moderately bullish strategy. We will initiate a long position on June 2, 2025, at $107,000. The stop loss will be set at $104,800, just below the established support level, to protect against a potential downside reversal. The initial target price will be $107,600, aligning with the forecast price for June 4, 2025, and a conservative breach of the upper Bollinger Band. To refine this strategy, we will incorporate dynamic adjustments based on RSI and Bollinger Bands. If the RSI rises above 70, indicating overbought conditions, we will consider taking partial profits at $108,800 and tightening the stop loss to $107,000. Conversely, if the price touches the lower Bollinger Band and the RSI falls below 30, indicating oversold conditions, we will hold the position, anticipating a bounce. If the price reaches $107,600, we will move the stop loss to the entry price of $107,000 to secure profits and reduce risk. The final target price will be $108,000 if the trend continues upwards. Based on the historical data and forecast, Ethereum shows an overall upward trend with fluctuations. The RSI consistently remains above 50, indicating bullish momentum, but occasionally dips below 60, signaling potential short-term corrections. The Bollinger Bands show that the price has been fluctuating within the bands, with periods of touching the upper band and lower band. Given the forecast for the next week, with prices ranging from $26.20 to $26.70, the trend is expected to continue upward. Therefore, I propose a strategy that combines RSI and Bollinger Bands to maximize potential returns. My strategy involves a combination of RSI and Bollinger Bands. We will enter a long position when the RSI dips below 60 and the price touches the lower Bollinger Band, indicating an oversold condition. Specifically, we will enter a long position at $2,630. To manage risk, we will set a stop loss at $2,530. The target price will be set at $2,680, aligning with the resistance level and the upper Bollinger Band. This strategy aims to capitalize on the upward trend while mitigating potential losses through strategic stop-loss placement. The predicted price movement based on the forecast and technical indicators suggests a high probability of reaching the target price within the given timeframe. Based on the historical data and forecast, XRP has shown a downtrend over the past 2 weeks, with the forecast indicating a continuation of this downward movement. The RSI consistently fluctuating around the 40 to 50 range suggests a neutral to slightly bearish sentiment, with dips below 40 indicating potential oversold conditions. Considering the support price of 2.14 and the forecast prices hovering around 2.15 to 2.22, a short selling strategy appears favorable. We will implement a strategy that combines RSI and Bollinger Band signals. When the RSI falls below 20, we will initiate a buy position, setting an entry price at $2.15. A stop loss will be placed just above the upper Bollinger Band to protect against sudden upward spikes, at $2.57. The target price will be set at the support level of $2.14, aiming for a conservative profit. To refine this strategy, we will incorporate Bollinger Bands to identify potential entry and exit points. When the price touches the lower Bollinger Band, indicating a potential oversold condition, we will consider entering a long position. Specifically, if the price reaches $2.14, coinciding with the support level and the lower Bollinger Band, we will buy. The stop loss will be set slightly below the lower Bollinger Band at $2.12, and the target price will be the upper Bollinger Band at $2.57. This combined approach leverages both momentum and volatility indicators to maximize potential returns while minimizing risk. We will prioritize the short selling strategy with an entry price of $2.15, a stop loss of $2.57, and a target price of $2.14 for the most efficient portfolio. Based on the historical data and forecast, BNB exhibits a slightly upward trend with support around $655 and resistance around $686. The RSI fluctuates between 50 and 65, suggesting neither extreme overbought nor oversold conditions. The Bollinger Bands indicate periods of volatility, with prices occasionally touching the upper and lower bands. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 50, signaling a potential oversold condition, and the price touches the lower Bollinger Band. Specifically, let's target an entry price of $655. We'll place a stop-loss order at $645 to mitigate potential losses if the price declines further. Our initial target price will be $675, aiming for a gain of $20. If the price reaches $675, we can reassess the situation. If the RSI starts to approach 80, indicating overbought conditions, we can consider taking profits or moving our stop-loss to break even. Given the forecast of $664 to $672 for the next week, a conservative approach is warranted, and we can adjust the target price to $670 if the market shows signs of weakening. This strategy balances potential gains with risk management, aligning with a high returns investment approach. Based on the historical data and forecast, Solana has shown a declining trend, particularly evident in the recent drop to $156 and the projected decrease to $161. The RSI consistently dipped below 60, reaching a low of 41.5, indicating a potential oversold condition. Considering this, I recommend a contrarian strategy focusing on short-term gains. We will enter a long position at $151, anticipating a bounce from the support level of $150. To mitigate risk, place a stop-loss order at $150. Our target price will be $161, aligning with the initial forecast, aiming for a quick profit of $10 per Solana. To refine this strategy, we'll incorporate Bollinger Bands. The bottom band has been consistently around $150 to $155, reinforcing the support level. The forecast indicates a potential bounce around $151, which aligns with the lower Bollinger Band. Therefore, the entry price remains $151, with a stop-loss at $150 to protect against a further decline. The target price is set at $161, capitalizing on the forecast and the potential for a rebound towards the middle Bollinger Band. This combined strategy leverages both RSI and Bollinger Bands for a higher probability of success, aiming for a $10 profit per Solana. Based on the historical data and forecast, Dogecoin has been in a downtrend, particularly evident in the recent price decline to $0.193 and the forecast indicating further drops to $0.184. The RSI consistently dips below 50, reaching an oversold level of 40.0, suggesting potential for a short-term bounce. The Bollinger Bands are widening, indicating increased volatility and potential for price swings. Given this analysis, I recommend a contrarian strategy focusing on short-term opportunities. My recommended strategy involves a long position at $0.205, coinciding with the first forecast price and a bounce from the support level of $0.193. The stop-loss should be set at $0.188, just below the forecast low for the week, to limit potential losses. The initial target price is $0.226, near the recent resistance level. If the price reaches this target, consider a partial profit-taking and a trailing stop-loss to capitalize on any further upward momentum. The RSI is currently at 40.2, indicating an oversold condition, further supporting a long position. This strategy aims to capture a short-term rebound while managing risk with a tight stop-loss. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuating between a support of $0.266 and a resistance of $0.275. The RSI indicates that TRON is currently within a neutral range, not oversold or overbought. Considering the forecast for the next week, the price is expected to remain relatively stable, hovering around $0.273 to $0.275. Therefore, a moderate bullish strategy is recommended. We will implement a strategy combining RSI and Bollinger Bands. The entry price will be $0.273, coinciding with the forecast price and the upper Bollinger Band. The stop loss will be set at $0.266, just below the support level, to limit potential losses. The initial target price will be $0.275, the resistance level, offering a quick profit. If the price reaches $0.275, we will move the stop loss to the center of the Bollinger Bands, which is $0.271, to protect profits and allow for further upside potential. If the price fails to reach $0.275 and starts to decline, the stop loss at $0.266 will be triggered, securing a small loss. This strategy aims to capitalize on the short-term upward momentum while managing risk effectively. Based on the historical data and forecast, Cardano shows a downtrend. The RSI consistently remained below 80, indicating no overbought condition, and recently dipped below 40, suggesting an oversold condition. The forecast prices for the next week are also declining, further confirming the downtrend. The support price is consistently at $0.659, while the resistance is at $0.706. Considering the current RSI of 39.1 and the forecast, I recommend a short position. Entry price should be $0.684. Place a stop-loss order at $0.706, just above the resistance level. The initial target price is $0.675, aligning with the forecast for June 7, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, confirming the oversold condition. If the price breaks below the lower Bollinger Band, which is $0.676, it signals increased bearish momentum, and we can adjust the target price to $0.675. Conversely, if the price approaches the middle band, around $0.751, it suggests a potential reversal. In that case, we should close the short position and reevaluate the market. This combined approach, using RSI and Bollinger Bands, aims to maximize returns while minimizing risk by dynamically adjusting our target price based on market behavior. Based on the historical data and forecast, Sui demonstrates a downtrend, particularly evident in the recent price action and the forecast for the coming week. The RSI consistently dipped below 50, with values nearing oversold territory, below 20, on multiple occasions, suggesting potential buying opportunities. The Bollinger Bands indicate periods of volatility, with price frequently touching or crossing the lower band, reinforcing the bearish sentiment. Therefore, my strategy is a short-term contrarian play, capitalizing on potential short-term bounces within the overall downtrend. I recommend a short position with an entry price of $3.18. The stop loss should be set just above the recent high of the Bollinger Bands at $3.24 to protect against a potential reversal. The initial target price is $3.05, aligning with a conservative profit target based on the recent price range and support level. If the price action indicates further weakness, we can adjust the target price down to $2.95. This strategy combines RSI signals, Bollinger Band analysis, and support levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Chainlink shows a downtrend. The price has been fluctuating between a support of $13.3 and a resistance of $15.9. The RSI has been consistently below 80, indicating that the asset is not overbought. However, the recent drop in RSI to 38.0 suggests a potential oversold condition. The Bollinger Bands show that the price has been approaching the lower band, which could indicate a potential buying opportunity. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. My strategy is to buy Chainlink at $13.7. The stop loss should be set at $13.3 to limit potential losses. The initial target price is $14.6, based on the resistance level and the forecast price. If the price reaches $14.6, we can consider moving the stop loss to break even. The second target price is $15.1, which is near the resistance level. This strategy combines technical indicators and price action to capitalize on potential rebounds from the oversold condition. The portfolio should allocate 60% to this strategy, 30% to the RSI strategy, buy when RSI is below 20, sell when RSI is above 80, and 10% to the Bollinger Band strategy, buy when the price touches the lower band, sell when the price touches the upper band. Based on the historical data and forecast, THORChain has shown a volatile trend with fluctuations between the support price of $1.65 and the resistance price of $1.96. The RSI indicator fluctuates around 58, indicating neither overbought nor oversold conditions recently. The Bollinger Bands have been widening, suggesting increased volatility. Considering the forecast for the next week, the price is expected to hover around $1.8, with a dip to $1.69 on June 5, 2025. Therefore, I recommend a moderately bullish strategy with a focus on capitalizing on short-term price movements. I suggest a strategy that combines RSI and Bollinger Bands. We will enter a long position when the RSI falls below 50 and the price touches the lower band. Specifically, enter a long position at $1.67, set a stop loss at $1.65, and target a price of $1.85. This strategy aims to profit from the anticipated bounce when the price nears the lower Bollinger Band and the RSI indicates a potential oversold condition. If the price fails to bounce and falls below the stop loss, we will exit the position to minimize losses. This approach balances risk and potential reward, aligning with a moderately bullish outlook. Based on the historical data and forecast, eCash shows a decreasing trend with a support price of $0.0000204 and a resistance price of $0.0000221. The RSI indicates that the asset is currently in the oversold territory, with a value of 34.9 on June 1, 2025. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential rebound. Considering these factors, I recommend a long position with an entry price of $0.0000208. The stop loss should be set slightly below the support level at $0.0000204 to limit potential losses. The target price should be set near the resistance level at $0.0000221, aiming to capitalize on a potential bounce and upward movement. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. If the RSI rises above 50 and the price touches the upper Bollinger Band, we can take profit at $0.0000221. Conversely, if the RSI falls below 30 and the price touches the lower Bollinger Band, we should maintain the position and wait for the RSI to rise above 50. The portfolio should be 60% long position, 30% wait for RSI to rise above 50, and 10% maintain the position and wait for the RSI to rise above 50. This approach combines technical indicators and price action to maximize potential returns while managing risk effectively. Based on the historical data and forecast, PancakeSwap has shown volatility with periods of both upward and downward movement. The RSI fluctuating between 47.9 and 69.1 suggests the asset has been neither consistently overbought nor oversold. The Bollinger Bands indicate periods of increased volatility, with the price occasionally touching the upper and lower bands. The forecast for the next week predicts a slight downward trend, starting at $2.39 and decreasing to $2.24. Considering these factors, I propose a moderately conservative strategy focusing on short-term price movements. My recommended strategy is a combination of RSI and Bollinger Band signals. We will initiate a long position when the RSI falls below 40 and the price touches the lower Bollinger Band, indicating a potential oversold condition. The entry price will be $2.25. The stop loss will be set just below the lower Bollinger Band at $2.1 to limit potential losses. The target price will be $2.47, aligning with the forecast and the upper Bollinger Band. If the price reaches the target, we will secure the profit and consider re-entering based on subsequent signals. This strategy aims to capitalize on short-term bounces while mitigating risk with conservative stop loss and target levels. Based on the historical data and forecast, Jito has shown significant volatility, with a recent downtrend culminating in a low near $1.58. The forecast suggests a continued downward pressure, with prices potentially reaching $1.59. The RSI consistently dips below 50, indicating a weak momentum and oversold conditions, especially nearing 33.5. Combining this with the Bollinger Bands, we observe that the price frequently touches the lower band, reinforcing the potential for a short-term decline. Therefore, I recommend a short position strategy. Entry price will be $1.75, with a stop-loss placed at $1.85, just above the resistance level. The target price will be $1.59, aligning with the forecast and the lower Bollinger Band. To refine this strategy, we'll incorporate a layered approach. Initially, enter a short position at $1.75, with a tight stop-loss at $1.85. If the price declines to $1.61, we can add to the position, reinforcing our conviction. The primary target remains $1.59, but we can consider a secondary target at $1.58, near the support level. This layered strategy allows us to capitalize on the predicted downtrend while mitigating risk through strategic stop-loss placements. The RSI readings below 50 further support this short-term bearish outlook. Based on the historical data and forecast, Starknet shows a downtrend. The price has been consistently declining from May 19, 2025, to June 8, 2025, with the forecast indicating further drops. The support price has remained stable at $0.133, while the resistance has fluctuated but has not been breached significantly. The RSI has been mostly below 80, indicating that the asset is not consistently overbought, and has recently entered oversold territory with readings below 40, suggesting a potential for a short-term bounce but not a trend reversal. The Bollinger Bands are narrowing, indicating decreasing volatility, and the price is approaching the lower band, which further supports a potential short-term downward movement. Therefore, I recommend a short position strategy. Entry price should be $0.142. Given the downtrend and proximity to the support level, set a stop-loss at $0.145 to protect against a potential short-term bounce. The initial target price should be $0.127, aligning with the forecast and lower Bollinger Band. If the price reaches $0.127, consider moving the stop-loss to break even to protect profits and potentially ride further downward momentum. If the price rebounds and touches $0.145, exit the position to minimize losses. This strategy combines technical indicators and forecast data to capitalize on the prevailing downtrend while managing risk effectively. Based on the historical data and forecast, Uniswap shows a mixed trend with periods of both upward and downward movement. The support price consistently remains at $6.23, while the resistance fluctuates around $6.47. The RSI values fluctuate between 48.4 and 60.1, indicating neither consistently overbought nor oversold conditions. The Bollinger Bands have widened recently, suggesting increased volatility. Considering these factors, I recommend a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. My strategy involves a long position with an entry price of $6.03 on June 7, 2025, when the RSI is approaching 50 and the price is near the lower Bollinger Band. The stop-loss will be set at $5.98, just below the lower Bollinger Band, to limit potential losses. The initial target price will be $6.4, aligning with the recent resistance level. If the price breaks through the $6.4 resistance, I will adjust the target price to $6.6. This strategy aims to capitalize on potential upward momentum while managing risk through strategic stop-loss placement. Based on the historical data and forecast, Wormhole is showing a downtrend. The RSI has been fluctuating but generally trending downwards, with a significant dip to 36.9 on May 31, indicating an oversold condition. The forecast for the next week projects continued downward movement, with prices decreasing from $0.0874 to $0.0731. The support price of $0.0783 has been consistently tested, and the resistance price of $0.0907 has not been breached in recent days. Considering the downtrend and the forecast, I recommend a short position. Entry price should be $0.0874, with a stop-loss set at $0.0907, just above the resistance, to limit potential losses if the price unexpectedly reverses. The target price should be $0.0731, aligning with the final forecast price for the week. To refine this strategy, we'll incorporate Bollinger Bands. When the price touches the lower band, it suggests a potential bounce, but given the overall downtrend, we'll use it as a confirmation for our short position. The short position should be initiated at $0.0874. The stop loss is set at $0.0907, slightly above the resistance. The target price is $0.0731. This combined strategy leverages both RSI and Bollinger Bands for a more robust approach, aiming for high returns in a declining market. This portfolio will be 70% short Wormhole and 30% in cash. Based on the historical data and forecast, ApeCoin shows a sideways trend with volatility. The RSI fluctuates between 47.6 and 63.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands suggest that the price has been trading within a range, with the lower band around 0.594 and the upper band around 0.726. The forecast for the next week projects a downward trend, with prices decreasing from 0.658 to 0.626. Considering these factors, I recommend a short-term contrarian strategy focusing on capitalizing on minor price dips. My recommended strategy is to enter a long position at $0.626, coinciding with the lowest forecast price. Set a stop loss at $0.638, just above the recent high and below the Bollinger Band center. The target price is $0.658, aligning with the initial forecast price and the recent resistance level. This strategy leverages the anticipated downward movement while mitigating risk with a tight stop loss. If the price breaks through the stop loss, it indicates a stronger than forecasted downtrend, and the position should be closed. If the target is reached, consider taking profits and re-evaluating the market conditions for a potential short position if the downward trend continues. Based on the historical data and forecast, Zcash demonstrates a clear uptrend with periods of consolidation. The price has consistently bounced off the support level of $43 and tested the resistance around $53.3. The RSI consistently fluctuating between 55.4 and 76.5 indicates strengthening momentum. The Bollinger Bands have widened, suggesting increased volatility and potential for price movement. Considering the forecast for the next week, with prices ranging from $52.9 to $54.9, I recommend a long position strategy. The entry price should be $52.9, with a stop loss set at $51.9, just below the recent low. The initial target price should be $54.3, aligning with the forecast high and a conservative profit margin. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, consider an additional entry at $53, with a stop loss at $52.6. If the price touches the bottom of the Bollinger Bands, it signals a potential buying opportunity. The ultimate target price will be $54.9, based on the highest forecast price. This combined strategy aims to capitalize on the ongoing uptrend while mitigating risk through strategic stop-loss placement and utilizing technical indicators for precise entry and exit points. This approach should yield high returns with careful risk management. Based on the historical data and forecast, Pudgy Penguin shows a downtrend with consistent dips in price. The RSI has been fluctuating, dipping below 50 for most of the period and reaching a low of 40.1, indicating potential oversold conditions. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential rebound. The forecast predicts a continued downward trend, with prices hovering around 0.0119 to 0.0107. Considering these factors, I recommend a contrarian strategy aiming to capitalize on short-term bounces. My strategy involves a long position with an entry price of $0.0108. The stop loss should be set just below the support price at $0.0099 to protect against further downside. The initial target price is $0.0125, aiming for a quick profit as the price bounces off the lower Bollinger Band. If the price reaches $0.0125, consider moving the stop loss to break even to secure profits and potentially ride the momentum further. However, given the overall bearish forecast, a secondary target price of $0.011 would be a more conservative exit point, acknowledging the potential for continued downward pressure. This portfolio prioritizes risk management with tight stop losses and aims to capture short-term gains from anticipated volatility.